Yeah. Jumpin', them boys up to something.
Please be advised of the disclaimers. Hey guys, what's going on? Welcome back to my channel. This is Pinnacle Trading here. So we're talking about stock market crash in 2019. What's going on? Let's go ahead and get into a technical analysis of what I see in the markets, what's actually going on. Let's look at the fundamentals and facts before we get into people's opinions. So I'm reading a lot of articles talking about, are you ready for the financial crisis of 2019? The bull market's gonna end, bear market's coming. A lot of these stuff, correction, stock market crash, recession, a lot of these terms being thrown around. Let's see what's going on in the markets. So today, let's look at the 5-day chart on S&P 500. This is the one that I look at the most to track the markets. Again, Monday, we got that huge breakdown from 264 area all the way down to 258.62. And today, Friday, we're closing at 259, right below 260 over there. So this is what I saw from beginning of the week. I saw markets making a big bull trap, and that's exactly what happened. Markets went up all the way to 268, trapped in bulls. People thought, oh, it's going to go back up to 270, 280, 290. No, it came back all the way down here, broke below 260. That's exactly what I was looking for. Again, I'm not a bull or a bear. I just play the trend. I do have investments, and I play along with money market management, but by most of the trading, I'm not a bull or a bear. I play the trend. So again, I'm actually glad this is going down because I want to get in on the dips at the low, and I want to start investing right there, and that's what Buffett would do as well. And you know, I'm a big follower of Buffett. So let's go ahead into the technical analysis of this. Let's get a brief overview recap of this on the yearly chart. Again, we broke below that 200 SMA right here at the 275 on S&P 500, all the way from highs of 293.94 down to 260 area. So down 33 points from the highs. So that's pretty acceptable. Again, we had a huge rally and expecting that correction. So we did get that correction. We tried to break over the 283 times, broke over a little bit, came back down. So again, triple bottom, what they call in the market as a death cross, and we did cross it below, broke that 260. We're back in correction mode, and we're about to enter the crash if we break below the previous correction lows, which will be below that 250. So let's look at a 3-year chart on this. Sorry, let's go back to the 1-year chart and look at the Fibonacci. And again, if you're a member, you get the script for free, and you can download the script and load it up. This is the Fibonacci chart. Again, this is a big reason why I was looking at the 260 area, because 261.7 is that support on 78.6 retracement. Next support at 260 as a whole dollar support, and every 10 will be that support. So big support 260 that was tested today, and it did break not too much below as we did see Monday, because we came down all the way to 258.67, but this barely broke down below 260. So again, not too much, but huge death cross coming in here, and if we're gonna break below that 260, could go down to all the way down to 252.92. This is what I see by the end of the year. That's the lowest it should be going, 252.92. If it does go any lower, next support will be at 250, and below that we'll be entering that market crash. Let's look at the max chart on this and look at the Fibonacci. A lot of people are saying that it could go down all the way to 215 area, because that will be about, I believe, 20 or 30% retracement, and that's usually that stock market crash level. And if it does go any lower, things will get really crazy again. But you can see we had that huge upward bull rally. That's the biggest thing that people are concerned about, because we are in the biggest bull rally in history, and we're going to see the biggest pullback in the stock market. So that's going to be a huge crash that's coming up. But what I see is the lowest, it shouldn't be going below that 234.67 at the worst case. If it does, then get ready for a huge dive from there. But I don't see markets going below that 252.92 by the end of the year, and below that 235 area in 2019. So definitely, again, this year we still have some earnings here and there, and we do have some catalysts that are coming up, again with the China trade deal, and we also have that Fed rate hikes, or if they want to keep it neutral or keep what they do on them. So we still have that Fed news that's coming up next week, and let's see what that says. But again, we are in that correction mode, and a lot of negative news that's going on. Again, with the stocks could struggle after record outflows. So this was one of the biggest outflows in the market. So a lot of people selling off and getting out of the market. And also J&J, they had that huge hit today. That one, if you haven't seen that on your news, and there's a lot of negativity in the market, and that's what's bringing it down as well. Again, we could easily bounce back from this 260, go all the way to 290, over 300 next year. That would be that new resistance. But I'm expecting more of a pullback into next year. Not so much by the end of the year, closer to that 252, maybe 255, but I don't see it go below that area. So let's see what happens next year. It's best to just wait it out and see what's going on in the market and play carefully from there. Just keep up with the news and set alerts. But again, the big thing that people are watching for is a Fed meeting that's coming up, I believe, next week, before the year. Yeah, that's going to be on Wednesday. So if they hike their rates, then we're going to see that big drop in the markets, because we don't want the rate to be hiked. And again, it says Fed meeting could be a pivotal for stock market looking for knight in shining armor. So they're really depending on this. Again, they're expected to raise rates Wednesday, and we saw that sell-off pressure this whole week in 5 days, and all the way from that 270 area down to 260 and below. So we're really betting on that. So again, I'll do another recap next week on Wednesday, see what happens, and a lot of volatility. But if we do break that, then expect a big move down if we get that hike rates. So again, guys, just stay calm in the markets and stick to the fundamentals, stick to the stocks. And again, last thing, if you watched my Apple video, I was talking about why the 170 support was that big 180 was that big support, and we did see bounce off of 170. Like I said, for swing trade, came up to a little over 180, came back down all the way there. Again, Apple is in that death cross as well. If it breaks below that 160, could get very ugly, as it's the biggest market cap in the market. So let's see what goes on with Apple as well. Keep that on watch. Keep S&P 500 on watch, and also keep the banks on watch as well, as we're seeing them way oversold. Again, Bank of America almost tested 24 today, came up a little bit, but sold off big. That's big 3 things to watch. So S&P 500, Apple, and Bank of America. Just banks in general, BAC, JP Morgan Chase, that's JPM. So keep those in watch. Again, don't panic, guys. Just stick to what you know, stick to the fundamentals. And again, I'll see you next week. We still have till Wednesday to see what happens in the market. And hope you guys have a great weekend. And I'll see you again next week. Take care.